Different types of business entities by power and success. Title: Exploring different types of business entities. Introduction: Understanding the various types of business entities is essential for entrepreneurs and individuals interested in starting their own businesses. The choice of business entity has significant implications for legal structure, liability protection, taxation, management, and other aspects of business operations. In this lesson, we will explore the most common types of business entities and discuss their key characteristics, advantages, and disadvantages. When you ask someone about their plans for entrepreneurship, the most common response you hear is, "I am about to get my LLC." The importance of this lesson is to inform you that an LLC is not the only type of business you can acquire. It is important to know the various business you can register for tax purposes. We will speak more about LLC in the lesson, but since that is such the common business type that everyone is familiar with, let me start by stating what LLC stands for. LLC stands for Limited Liability Company, so let's think about that. If the company is getting limited liability, who is getting the majority? Maybe that question will give you some clarity when choosing this as your type of entity. Sole proprietorship. Definition: A sole proprietorship is the simplest form of business entity where an individual operates a business as the sole owner. Characteristics: Ownership: owned and managed by a single individual. Liability: the owner is personally liable for all business debts and obligations. Taxation: profits and losses are reported on the owner's personal income tax return. Advantages: easy and inexpensive to establish. Complete control and decision-making authority. Simpler tax reporting requirements. Disadvantages: unlimited personal liability. Limited access to capital. Lack of continuity and succession planning. 2. Partnership. Definition: A partnership is a business entity formed by two or more individuals who agree to share profits, losses, and management responsibilities. Characteristics: ownership: owned and managed by two or more partners. Liability: partners are personally liable for the partnership's debts and obligations. Taxation: partners report their share of profits and losses on their personal tax returns. Advantages: shared responsibilities and expertise. Potential for increased capital and resources. Flexibility in decision-making and management. Disadvantages: unlimited personal liability for each partner. Potential for disputes and conflicts. Limited life and challenges in transferring ownership. 3. Limited Liability Company, LLC. Definition: A limited liability company, LLC, is a hybrid business entity that provides the limited liability protection of a corporation and the flexibility of a partnership. Characteristics: ownership: owned by one or more members. Liability: members' liability is limited to their investment in the company. Taxation: LLCs can choose to be taxed as a partnership or a corporation. Advantages: limited liability protection for members. Flexible management structure. Pass-through taxation or the option for corporate taxation. Disadvantages: complexity in formation and ongoing compliance. Varying regulations and requirements across jurisdictions. Limited life or potential dissolution upon a member's departure. 4. Corporation. Definition: A corporation is a separate legal entity that is owned by shareholders and managed by a board of directors. Different types of corporations are Type C, S, non-profit. The difference in the types will be discussed in another lesson. Characteristics: ownership: owned by shareholders. Liability: shareholders' liability is limited to their investment in the corporation. Taxation: corporations are subject to corporate income tax. Advantages: limited liability protection for shareholders. Ease of raising capital through the issuance of shares. Perpetual existence and transferability of ownership. Disadvantages: complex legal and regulatory requirements. Double taxation on corporate profits and dividends. Formalities in governance and decision-making. Now here are my final thoughts. Conclusion: choosing the right business entity is a crucial decision that impacts various aspects of a business. Sole proprietorships, partnerships, LLCs, and corporations each offer distinct advantages and disadvantages in terms of liability protection, taxation, management, and other factors. By understanding these different types of business entities, entrepreneurs can make informed decisions that align with their business goals and protect their interests.